Welcome back. So we are here on January 31st, the last day of the first month of a very interesting year. And I've got key timing and candlesticks action to show you on the E-mini S&P 500 futures, my baby. So again, today is January 31st, 2022. Now, important reminder before we dive into the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Okay, so let's go over to my chart of the ES, and what we're going to do is go top down from weekly down to the daily down to the 60-minute. All right, so let me bring that up on my TradeStation screen here. All right, so here we've got the weekly chart of the E-mini S&P 500 futures contract, specifically the March 2022 front month, and you can see that I have a variety of blue and pink horizontal lines on this chart. Let me tell you, every single one of those was calculated within seconds, not minutes, seconds, based on my application of candlesticks. It's what I call not your mama's candlesticks. So those of you in the Hima Reddy Tribe, keep an eye out. I have live training I'm going to be doing on this topic this week. And if you're not part of the Hima Reddy Tribe, be sure to join so you don't miss this live training. So after deriving these levels, which I have fully detailed in today's Skinny in the Mini report, okay, I want to take us down to a daily time frame because we can really importantly see on the weekly chart that we are holding the low from October 1st. But what's next? What else can we ascertain? Well, the RSI power zones are in the bull support power zone. That's great. But the weekly bars are still in a downtrend, right? We still have lower bar highs since the week ending January 7th. So I'm going to just change the time frame here, right? So in a full complete analysis, what I do is have separate charts for each. But I'm just giving you sort of a quick tour and giving you the highlights here. So taking down to a daily time frame, you can see all those resistance levels are still on the chart. And you can see that the daily chart has essentially been consolidating after posting the low on January 24th. Now, this January 24th candle was an important candlestick, and it has levels that I can derive, my nano twists that I pull from it that provide even more support and resistance. And again, those are referenced in my full Skinny in the Mini reports. As for momentum on the daily time frame, we can see that we are now back in the bear support power zone and recovering from it. So that's a good sign for the broad market. We can also see that those same weekly levels now tie in with some past daily chart levels. For example, this weekly level, which again is fully detailed in the report, is close to this old bottom from December 20th. So old bottoms can turn into new resistance levels. So we want to watch out for any of those along the way if the current recovery continues. All right, now taking this down to a 60-minute time frame, because that's the pulse of the ES market. Again, I'm just going to change the time frame on this one chart. In my Skinny in the Mini, I have a full separate analysis on this time frame. Let's take a look. All right, so you can see that we've been in a trading range roughly around 44.50, which you can see me highlighting right now, and then between about 42.75, okay? So I have that more defined in the report, but that's the rough idea of the range we've been in. Also notice the RSI power zones have just been going sideways with that, right? They're not really respecting one set of zones, the bullish ones or the bearish ones. The thing is, when you take evidence from the weekly chart, the daily chart, and the 60-minute chart, and you compile it with the following, it sets us up for the likelihood of a breakout coming soon. And specifically what I'm talking about is the intersection of two trend lines that happen to be meeting today on the charts. Now again, the trend lines are fully detailed in my report, and if you take the trend lines from the report and draw them out, you will see exactly what I'm seeing. So I'm just letting you know the results, that today is the key timing point based on a trend line intersection. So what does that mean? Well, that means that if we see a clear break above some key levels here, we can expect further upside, and I think that the rest of this week we could see further recovery to the upside in the E-mini S&P 500 futures and essentially in the broad market. But if we're not able to clear these key levels while in this key timing point, in this window of energy essentially that could really propel the markets, then I think that we have more consolidation ahead of us. And the shorter term levels, some that you can see here and the ones that are detailed fully in the report, will help you navigate those ranges, all right? So again, important reminder here, especially at the beginning of the week, to look at all time frames down to your trading time frame, especially if you're day trading, and to be cognizant of the support and resistance that you can derive from individual candlesticks on those time frames and combine them with any forecasting like I did here. So again, I have a live training coming up on candlesticks, not your mama's candlesticks this week. Definitely check it out. I also happen to be taking today to work on my long-term quarterly outlook reports. So I do these once a quarter in the first month of the quarter, and I was honestly waiting for this recent volatility to shake out before doing these reports. So that's what I'm going to be doing today and publishing those quarterly reports to my Outlook annual members. So I look forward to seeing you on the inside. Remember to subscribe, like, and follow, and definitely comment below, all right, guys? I want to hear what you have to say about the analysis I share, and I want to make sure that I'm speaking your language here and creating videos for you that are educational, helpful for you to boost your trading, transform your trading, and especially help you better deploy your Hima Reddy tools and techniques. Catch you on the inside, and I'll see you next time. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.